or I was listening to a podcast the other day, and it was someone kind of doing analysis about the last four first year bull markets. So he was considering 2020 to be the first year of a new bull market. It was like 2009, I think, right after the housing crash, after the dot-com bubble, and another one from like 1970s, I think, or 60s. And so what happened is, like, if you look at the S&P 500, I don't know what the math is on that, but when you actually do the math, if we're talking about a low in 2020, we went from 218 to 420. That's a crazy growth.
Oh yeah,
And
the onion
so,
chart looks pretty interesting.
yeah, with that big pullback. But that's just like basically what this video, get back on topic. This video said the second year of all these four first year bull markets, which we're assuming last year was one. Ooh, that was nice. The
Look like a little
first
Jake
year of
Paul. No,
those.
who's Logan Paul? I don't know who's fighting these days. Let's go.
That was funny. The first year of a bull market, I mean, the second year of a bull market was always down of the last four second years of a bull market, which we're assuming 2021 is the second year of a new bull market. And so we can probably expect it to be harder to pick stocks right now. It's not going to be as easy as last year where no matter what you bought went up. Like, we're just not going to be,
Right, we
it's
gotta be
not going to be
picky.
that kind of market right now.
Yeah, we're gonna have to be picky and strategic about it.
Yep. And so the market being down is really good for long term investing, because that means, oh, we're actually showing what past years in history had shown, um, and we're potentially not going to be in this super long term, like, some people say like 10-year bear market, because we're actually seeing things pull back right now. And so I would say expect some more volatility in 2021,
Yeah,
and
people are
picking,
gonna start
finding.
pulling money out and so forth. We were just also talking earlier about
Yep.
institutional investors and some other folks are starting to pull out in the waves. Not as much.
Yeah, so there's some news that came out this last week that it's in the last 40 years, we've seen the largest pullback in hedge fund investing. So, because what that means is hedge funds, they have money from investors, and then they invest that money in the stock market. And so, for the first time in a long, or first time in like 40 years, we hit the largest amount of money being pulled out of the market. And it's
which
because
is
what's
insane.
happened this year, like, a crazy run happened in the market. So this is like something like this should be happening, you know? Obviously it sucks, but something like this should be happening. And so I think that's just to keep in mind when you're thinking about buying stocks right now is I wouldn't be buying any growth stocks that are at all-time highs right now or
Right?
close to all-time highs. Those are not the purchases I'm making right now in the
Nope.
market.
Nope. I'm looking for those strong pullbacks. Maybe the earnings reports didn't come back as strong as some thought. But ironically, there's a lot of people that have a lot of companies that have had good earning reports, right?
Hmm.
But they're like off by one of their oh man, I kind of wanted that. But they might be off. They're up by 10 cents instead of 30 cents or whatever. And for whatever reason, like Netflix, for example, I mean, they were down in terms of subscriptions by
Gotcha.
millions. I think they only had 2 million, and they were expecting 8 million. They were down, but revenue was up. Like EPS was up, and so it's pretty interesting to see. Even though people or businesses are making money, but I think this also goes back to what you were saying about people pulling money out, traditional investors and hedge funds, because they don't know what's going to happen.
Yep. And what you have to keep in mind is for some of these stocks like Netflix went up last year because of the
Yeah,
huge
COVID,
growth in new subscribers because COVID happened, everybody was
right?
at home. And so when you think about stocks, you can't always think about where they were. You have to think about where they're going. So, like,
Same. Wayne
The big
Gretzky
hedge
saying,
funds,
"Follow where the puck's gonna go, not where it's at
yep.
right now."
So big hedge funds, they always they always value a company on where they're heading. So when you think about last year, think about Facebook, Google, think about Netflix, like subscribers went up, which will be next quarter. And so Netflix is going to have a really hard number that they have to hit on their earnings for Q3 or Q2, whatever the next one is. And then what for Facebook, like Facebook saw a crazy amount of people advertising because everything shift to e-commerce. So are they going to be able to hit that number next quarter? Probably not. And so these are things you have to think about going into the next quarter of people have to try to grow when last year companies, specifically tech companies, saw crazy growth because of COVID. So
Right.
that's
I
why
think
people are
Zoom's gonna
selling
be on
out
that
now.
list. Yeah, I'm kind of anticipating Zoom not not surviving this year like they did last year. I mean, the growth
Oh
was
yeah, they're
exponential,
gonna
but
have crazy numbers that they have to comp this year on earnings. Like,
right,
there's no way they're gonna be even close to those numbers.
right,
With offices, like people are getting the vaccine. Like my company said, we'll probably go back around September.
yep,
Like that's soon.
yeah.
And
There's a
so when
lot of
all these
cities,
companies go back to the office, we're gonna be using, Zoom or whatever product we use, three times as less because we're in the office. So people are gonna start canceling their accounts. They're gonna downgrade their accounts. A lot of businesses are. And so these are things you have to think about going into next quarter. People have to comp their last year results, which is going to be really difficult. So that's why tech's, I think, pulling back right now. And so I would not be buying anything that I wouldn't be buying any tech stock or growth stocks that are at highs. I'm going to be
yeah,
looking for
they're
pullbacks.
all really high. I mean, Zoom, I think I actually had a pretty strong
Zoom
pullback.
pulled
Yeah,
back a lot. Yeah.
they're already
They're
coming
half,
back
I
down to
think.
earth. Yeah, 295
But their
PE ratio.
valuation is still crazy high.
Yeah, they're
And
86
so
billion.
with a high valuation, PE ratio on 131, plus
Yeah,
next quarter they're going to drastically miss earnings
right,
because people are going to be they had so much growth last year when COVID happened
right.
that they're going to absolutely miss earnings like crazy. And so that's something you have to keep in mind for all these companies going
Hmm.
into the summer.
Yeah,
Their
it's
earnings
already
from the
telltale
from the
sign right
months
here,
before.
right? Stock underperforms Thursday when compared to competitors, right? So the people, like Microsoft, who's already well established, they just added on, right? Vertical integration, they added on Microsoft Teams, they're already working on it. They plugged it in. Zoom, their only platform is what they do, right? They don't have a diversified portfolio like Microsoft where they can pivot and say all of our income isn't based on this one software. Where Zoom, it's solely, exclusively that, right?
Yep.
So it's pretty interesting to see that. But definitely, I mean, I got this report here, slid 1.53%. Obviously, I think folks are looking at vaccine. California, for example, Governor Newsom said we're opening June 15th. I know a lot of cities are starting to go back, to the offices August, September, like you were saying. A lot of the companies are also looking at that. So
Your boy sweating over here.